This is the Vanguard Growth ETF portfolio, symbol VGRO. Created by Vanguard, it's a growth ETF portfolio. The ticker is the most important thing because that's the ticker you're going to enter when you're buying it in your registered account or non-registered. Some identifiers at the top. It's traded on the Toronto Stock Exchange and in Canadian dollars. It has a little over $6.3 billion in assets. It was created about 7 years ago in 2018. You can see the eligibility is all the registered accounts, including non-registered, otherwise known as taxable accounts. Management fee is 0.22% MER. Management expense ratio, which includes the management fee, is 0.24%. So the fee for the year is 24 cents for every $100 invested. The fund has actually a lot of components. You can see here almost 38% is US total market. About a quarter is in Canada All Cap Index. 13.1% seems to be in developed, which might be emerging markets, ex-North America, which means outside of North America. 11.6% is in a Canadian Aggregate Bond Index. 5% is in an Emerging Markets All Cap Index. Almost 4% is in a Canadian dollar hedged US Aggregate Bond Index, as well as a global ex-US, which is outside of the US, Aggregate Bond Index. It looks like an approximately 80% equity, 20% bond ETF, with the equity coming from a number of sources as well as the bonds. Technology is a huge component, not as big as the S&P 500, but it clocks in at almost 22%. Financials is also large at 20.7%, and then it goes down quite a lot. Industrials taking up 12.6%, then consumer discretionary, and so on and so forth. Number of stocks in this ETF, over 13,000. Price to earnings ratio is 21 times. Again, not as high as the S&P 500, but still very ambitious. So for every dollar of profit, investors are willing to pay over $21. Price to book ratio of 2.7 is not crazy high. I believe the S&P 500 was at 5 times, but 2.7 is still ambitious. It means if you have a home based on raw materials that cost $100,000, people are willing to pay $270,000 for the home. Why do they pay the extra $170,000? They're happy, they have optimistic outlook, strong sentiment. Return on equity, 14.5%, which is good. Earnings growth rate, 15%, which is also solid. The equity yield, or the dividend that's being paid out, is 2%. At the bottom here, they give you the characteristics of the bond. So they have the average coupon, maturity, and quality. So they focus on AA minus, about 10 years to maturity. Average coupon is 3%. Again, that's probably more than you ever wanted to know about VGRO. It seems to be a globally diversified equity and bond portfolio, approximately 80-20% in asset allocation. Learn the lessons about money that your parents and teachers didn't know. Download my free newsletter linked in the bio. Good luck. Take care.